relieve the supply side growth constraints, as well as address the flooding incidents which has become perennial on a permanent basis. The average interbank core rate declined from 9% in July 2018 to 4% in September 2018. Similarly, the average open buyback OBB rate declined from 11.44% to 4.72% over the same period. The relative decline in market rates reflected the increased statutory allocation to states and local governments and maturing securities. The development does not seem to have been significantly transmitted to retail interest rates, as average maximum lending rates marginally declined to 30.93% in August from 31.09% in July 2018. Similarly, average prime lending rates decreased to 16.65% in August from 16.83% in July 2018. The weighted average deposit rate also declined to 4.57% in August from 4.47% in July 2018, widening the spread between the average lending rate and average weighted deposit rates to 26.36% in August 2018 from 26.30% in July 2018. The committee noted the decrease in external reserves to 44 billion in September 2018 from 45 billion at the end of July 2018. Total foreign exchange inflow through the economy fell by 38.34% to $6 billion in July from $9.73 billion in June 2018. Committee believes that the creation to external reserves should strengthen in the last quarter of 2018, with crude oil prices remaining above the budget benchmark price of $51 per barrel and oil production increasing to 2.3 million barrels per day. The committee noted the relative stability in both the investors and exporters window of the foreign exchange market, which was sustained by autonomous inflows and measures taken by the central bank to deepen the foreign exchange market and curb speculative practices. The MPC expressed concern at the decline in major capital market indices. The all-share index decreased by 14.99% to 32,540.17 on September 21, 2018, from 38,278.55 at the end of June 2018. Similarly, market capitalization decreased by 14.33% to 11.38 trillion naira in September 21, 2018, from 13.87 trillion naira at the end of June 2018. The development was due largely to sustained profit taken by portfolio investors and capital reversals as foreign yields become increasingly more attractive. The overall outlook and risks. Available data and forecasts of key macroeconomic indicators show a positive outlook for the economy in the third quarter of 2018. The committee expects the sustained implementation of the 2018 budget, improvements in the security situation, and sustained stability in the foreign exchange market will stabilize prices and strengthen economic growth. Growth in the non-oil sector, especially agriculture, manufacturing, services, and light industries, are expected to drive output growth. Committee, however, identified the downside risks to the output to include the impact of increased monetary policy normalization in the advanced economies and the strengthening US dollar. Others are delayed implementation of the 2018 budget, weakening demand and consumer spending, build-up in contractor debt, low minimum wage, impact of flooding on agricultural output and other economic activities, continuing security challenges across northeast and north central zones, and growing level of sovereign debt. The outlook for the year, however, remains positive, as the economy is projected to grow by 1.75% in 2018, anchored on continued stability in the foreign exchange market, sustained high price and production of oil, and improved electricity supply. Inflation outlook suggests a mild resurgence of inflationary pressure in the economy, traceable largely to cost-push factors, election-related spending, amongst other domestic factors. The moderating factors to the outlook would include improved power supply, increased expenditure on capital projects, and improved security conditions, all of which may exert downward pressure on consumer prices in the near term. The considerations of the committee. The committee appraised the macroeconomic environment and noted that at its July meeting, modest stability had been achieved in key indicators, including inflation, exchange rate, and reserves. In particular, relative stability had returned to the foreign exchange market, buoyed by a robust level of external reserves, with inflation trending downwards for the 18th consecutive month. These gains so far achieved appear to be under threat of reversal following the new data, which provides evidence of weakening fundamentals. The committee identified rise in inflation and pressure on the external reserves created by the capital flow reversals as the current challenges to growth. It noted that inflationary pressures have started rebuilding and capital flow reversals have intensified, as shown by the bearish trend in the equities market, even though the exchange rate remains very stable. The committee was concerned that the exit from the recession may be under threat as the economy slowed to 1.95 and 1.50% during the first and the second quarter 2018, respectively. The committee noted that the slowdown emanated from the oil sector, with strong linkages to employment and growth in other key sectors of the economy. In this regard, the committee urged government to take advantage of the current rising trend in oil prices to rebuild fiscal buffers.